The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone. This is Neil Green again with you on the weekly webinar brought to you by iTrader.com. Hope everybody's doing well, that you had a great week. We had the World Cup games. It was fantastic. And now we move on. Today we're going to talk about the earnings season. Okay, just want to wait for about a minute for everyone to arrive. Just to tell you that if you have any questions during the webinar, you have a chat window, so you can just write me down and I'll do my best in order to try to answer all your questions during the webinar. Just to tell you that this is a weekly webinar that doing once a week every Tuesday at 6 p.m. GMT time, which is 7 o'clock right London time. And you're more than welcome to join me. Every week we're talking about different topics, fundamental events, technical analysis, trend trading, a lot of stuff. And today we're going to talk about the earnings season since it just started. So this will be our topic for today. At the end of the webinar, I'm going to give you a minute or two just to ask me if you have any more questions that you didn't ask during the webinar. Hopefully everybody can hear my voice, see my screen, and let's get going. So the earnings season. Okay, the earnings season actually takes place in the United States 4 times a year, every quarter. Right, so we have one earnings season starts at January, and then the other one on April, and then we have one on July, which is now, and we have one that starts at October. All right, so 4 seasons every quarter. What actually happens is all the corporations, all the companies in the US, that has shares. Companies issue shares in order to raise capital, right? If I have an idea and I need money, all right, I want to open a business, I want to start a company. I don't have the money. What do? I issue shares, and then the public buys stocks from me, shares, right? And then the public actually has ownership on the company with me or my group, and we're partners, all right? So the whole idea behind shares is to raise capital in order, to give out percentage and raise capital in order to start the business. And all the biggest U.S. companies has shares out there, all the familiar names that I'm sure you already know. And 4 times a year, they actually hand out reports, right? They hand out reports because it's public companies, and they must hand out reports because we hold the shares and we must know what's going on in the company in order to, know whether we want to hold the shares, sell the shares, buy new shares, and so on. So in January, we have an annual report for the whole year, the previous year, the one before, and we have a quarterly report. The other earning seasons, every quarter we have quarterly reports, and the earning season takes about a month and a half. So it's almost half of the year is the earning season, which starts with the banking system, the financial system, and then goes on to the technology shares, and so on and so on, and the rest of them. All right, so let's start. So the earnings season started last Friday. All right, the earnings report show second quarter results from U.S. companies. So we had earning reports for the second quarter, right? On April, we received the first quarter of 2018, and right now we received the reports for the second quarter of 2018 from U.S. companies. Traders are recommended to prepare their accounts for stock trading, which means, guys, let me just, the earnings season is a great time, okay, to find trading opportunities, because publication will continue until mid-August. So we still have time. We still have around, give or take a month to trade. And we have publications of earning reports every day, which means from now on, we have trading opportunities when it comes to stocks every day on daily basis. Just to remind you, the stock market is open from 2:30 London time, all right, which is 9:30 in the morning New York time, until 9 o'clock in the evening London time, which is 4 o'clock in the afternoon New York time. All right, so it's enough time. We're talking about 6.5 hours to trade stocks. When the market is closed, you cannot trade the stocks, okay? So you can trade only when the market is open. I'm going to show you, you're going to look at the calendar, you're going to know exactly every day what company is publishing, and I'm going to teach you during this webinar exactly how to trade these reports. What should I look in the report? Where do I find it? How do I trade on the MetaTrader, on the stock itself, and so on. So prepare your accounts means that if you want to take advantage of a few opportunities, okay, you want to have an account, okay, you want to fund your account, you want your account to have enough funds in order to do the smart thing, and this is diversify your portfolio, okay? It doesn't matter, by the way, what I say it every webinar, let me repeat it again, it doesn't matter what I want to trade on, okay? If I'm trading the earnings season, which means I'm trading stocks for, I don't know, a month and a half, the smart thing to do, guys, is just, to diversify your portfolio and trade on a few stocks. So if one won't go my way, I have the other one to cover it. All right. This is the right risk management, and this is the right way to do that. So far, major banks reported solid earnings, okay, including Citibank, JP Morgan, Bank of America, Goldman Sachs, and so on. I told you the earnings season always starts with the banking system. So we started with the financial system with these banks. And bank stocks are highly correlated, and all three banks trading higher right now. This trend could continue with record high upside targets. Let's go to the MetaTrader. Open the MetaTrader. All right, let's take a look at the banks. We go down here to US stocks. And for example, Citibank on a daily chart. This is a daily chart. Each candle that you see here represents one day. You can see it was yesterday. We had a great report. And I want to show you something that is beautiful. Okay, first tip to how to trade the banking system. You can use it on every earnings season. Okay, since the banking system is highly correlated, which means the same thing affects banking. All right, if interest rate is higher, banking making more money, right? From loans, mortgages, their income is higher, right? If there are any regulations on the banks that affect the banks, right, it affects all of the banks, right? Think about it. If there is a law, there's not going to be one law for JP Morgan and then one law for Citigroup, right? There's a law in the country, in the United States, which means it affects all the banks, right? So the banking system works in a perfect correlation, which is great for us because right now it's too late because it started, but just for you to remember to the next earnings season, it's once a quarter. If JP Morgan had a report and it was a good report, right, and we see the reaction of the market, okay, before that, let me tell you something. The reports are published either before the market is open or after it's closed, never during, not to interrupt the trading, never during the day, okay, which means that the biggest movement that you'll see, they're going to take place on the pre-market, which means the market is open, all right, we can trade, we can buy, people sell, a lot of money. If we have more demand, more buyers, the price of the stocks are going up, more sellers, prices are going down, and then the day of trading is over, right? 9 p.m. London time, 4 p.m. New York time, the US stock market is closed, and then this is when the companies are publishing or hand out their reports. When they publish the report, what really happened is the bodies that can really trade, which is not us, okay, the people, because the market is closed, is banks, investing houses, big money. This is exactly when we see the biggest movements, all right? The biggest movements on stocks, and we as traders, we see it the day after, usually with a gap down or a gap up. So when the market opens, when we can trade, we're usually going to see that with a gap. We cannot trade a minute after the report. And I'll try to teach you during this webinar exactly how to trade the day after when the market is open and when we can trade. So let's go back to the banking system. This is Citigroup. Okay, now I want to show you the correlation. Look at Citigroup. Look at this big green candle, right? The daily candle after the report. And let's take a look at Bank of America. Same thing. You see? Huge green candle, daily one. Okay, let's take a look at Goldman Sachs. Does it look the same? Okay, we had one day that was green, and then the other one, it went back down. And JP Morgan looks the same. A green candle, right? Highly correlated. One is going up, the rest of them are going up as well. I think it's a great thing to remember for next earnings season. So bank stocks higher correlated, we said, and higher interest rate. Okay, what are the reasons? Okay, just for you to understand the banking system. Higher interest rate have been positive for US banks. All right, higher rates generate more income from loans and mortgages, right? Interest rate is the price of money. If you guys wanna, I don't know, put your money in a saving account, you wanna look for a higher interest rate, which means the bank will pay you more interest for your money. But on the other hand, if I'm buying money, which means if I'm taking a loan, if you people ever took, I don't know, mortgage for your house, right? We're looking for lower interest rate, because if we take a loan or mortgage and interest rates are high, right, the payback, the payments that we have to pay to the bank will be higher. We have to pay more money. So higher rates means that the banking system, okay, the banks are making higher income. They make more money because we pay them more, right? So higher rates were great for the banks. Interest rate in the United States is 2.25%. We had 2 hikes this year, 3 hikes last year. We expect 1 more hike at least, and then more. Interest rates are going up in the United States, which means that the banking system, the banks are making more money. And we just saw the report on Friday, the reports on the banking system, and right now the stocks are trading higher. Short and medium term positions could be highly attractive among traders. So far, the bank trade, as you saw, is positive on earnings. All right, got it? All right, banking system right now going up, and let's see where it goes. Now we started with the technology stocks. So Netflix is down on a disappointing earnings report because of a low subscriber growth. Let's try to understand how it works. Right? When I want to look at the report, okay, you can read the whole 100, 120 pages, but let me give you the highlights. When we see a report, if there's a report that published, you can find it. Just Google the name of the company, and then you can see the report. Right? When I'm looking at the report, there are 3 major things, and you can write it down. Okay, 3 major things that I want to look when I look at a report. First is the P&L. Right? Did the company make income? Did they make money or not? That's important, right? We want to know whether the company has earnings, right? It's called the earnings season. Did they make money in this quarter? Okay, what happened in the past 3 months, this quarter? Was it a good quarter for them or not? Where can you find it? Each company that you look at, all right, you can find the EPS. EPS stands for earning per share. All right, just Google EPS and the name of the company that you want to look at, and then you're going to get the EPS. Now, the EPS works the same way, just like when you trade a fundamental event, right? You look at a calendar on our website or investing.com or Forex Factory, whatever is good for you. And then you have the forecast. What is the expected EPS, right? And after that, we have what actually happened, right? We have the forecast, and then we have the actual result. Now, if the EPS is higher than expected, earning per share is higher than expected, right? We expect, it means there was a good report, and we expect usually the price of the stock to go up. And the opposite, if the EPS was disappointing, this is one, okay? This is one. EPS shows us the P&L, right? Because EPS is for one share, P&L is for the totally for the whole company. So this is one thing you want to look for. Second is you want to look for new businesses, which means, let's take Apple, for example, right? Just for an example. If Apple has new iStores, okay, if they got into new Facebook, if they got into new countries, new markets, okay, we want to see if they have some new businesses, if they split themselves more. And the third one and most important one is the key number. If you look at Apple, you want to know how many iPhones they sold, right? 70% out of Apple's income is selling iPhones. Of course, the rest is like cloud services and iPads, and the rest of their products. But usually, when we look at Apple, we want to look at how many iPhones we expected, what was the forecast for the quarterly report of iPhone sold, and what they actually, how many iPhones they actually sold during the quarter. All right. When we look at Facebook, for example, new businesses to how many new countries, right? P&L, you can get it from the EPS, how much money they made from commercials, right? And the key number will be subscribers. How many new subscribers we have on Facebook. More subscribers means more commercials, means higher P&L for Facebook. All right, so we had a report of Netflix yesterday, and the key number for Netflix would be subscriber growth. All right, you see Netflix is down on disappointing earnings because of low subscribers. The thing is, the company added 5.1 million users during this quarter, but forecast was 6.3. All right, so we had an expectation that 6.3 million new subscribers will join during this quarter, during this 3 months, will join Netflix, and the number on the report was a bit disappointing, was 5.1. All right. Now, if you look at Netflix, look at it was very interesting because it gives us a great opportunity today. And let me show you what happened. This is Netflix on a daily report. Now look at this. This is yesterday. Yesterday was, just a day of trading. It opened at $398 per share and closed exactly at $400 per share. And then, right, we said the report is published after the market is closed. So the market is closed. Then we had a report. It was a bad report, I showed you. Less subscribers than what we expected. And then there was, price went down like, 13, 14%, crazy, all the way to $346. This is when it opened today, you see, on $346 per share after it closed on 400 yesterday. Okay, this movement from here to here happened when the market was closed, when the big money was trading. Okay, big corporations were trying to get rid of Netflix stocks because of the bad report, and they offer it in the lower prices, and then the price of the stock went down. And then today, right now the US market is open, by the way. Okay, and then today it opened here, and you see the correction. Now this is a great opportunity because if we look at a monthly chart of Netflix, look, this is crazy. Netflix are doing great, right? Streaming TV, the new thing. Everybody, I guess some of you have Netflix, right? Monthly report, you see this is February, March, April, May, June, and then on July, because of this report. But look what happened. It started here, and right now the price is 377 and still going up. So, okay, the question is, will it close the gap? Right now, this is where, this is how it looks, because the stock market looks very strong. The US stock market looks great. Indices are booming up, right? If you look at the Nasdaq, S&P 500, Dow Jones, the US market is going up. Taxes are lower. Corporations are making more money. If we looked at the past NFPs, a lot of new payrolls in the United States, wage is growing, unemployment is very low in the US. So the US economy situation looks great. And after the disappointing report, the people didn't really buy, the whole idea of Netflix going down. They decided to buy the stock in a cheaper price. It was a great opportunity today. All right. Netflix is the first FANG stock to report. You can write it down. If we said that we had, FANG stands for Facebook, Amazon, Netflix, and Google. Okay, and if you want, some people do it with double A. Right, they add Apple as well. If you take the FANG stocks all together, including Apple, you'll get to around $3 trillion, which is the economy of Italy. Okay, just for you to understand. These are the biggest companies in the world when it comes to market capitalization. Okay, they worth a lot of money. And Netflix is the first FANG stock to report. And why am I saying it? Because you have to understand that just like the banking system, what I showed you, right? I showed you that Citigroup, JP Morgan, Goldman Sachs, and so on are very highly correlated. The technology sector, just like the banking sector, is very correlated. Especially these FANG stocks are affected from the same things, and they're very highly correlated, right? If Netflix is going up, we expect usually Facebook, Google, and Amazon to go up as well, and the opposite. So we had a bad report on Netflix, all right, but the stock started to rise up at the beginning of the day. So we have the FANG stocks, and FANG stocks reached their peak after many years of record breaking. Now, if we look at the FANG stocks, take a look at this. Let's take a look at these four stocks. As we said, FANG. So the first one is Facebook. Look at Facebook. This is a month. Let's put a monthly chart. Each candle represents 1 month. All right. This line we don't need it here. Take a look. Facebook, the highest price ever, $208 per share, almost $209 per share. That's the highest price of Facebook ever. All right, just for you. Look, this is crazy. Okay, Facebook, and then we have Netflix that I showed you. Right, we saw Netflix. We have Google. Okay, what happened here? They just split the stock from 1 to 6. So look at this month here from 2014 going up like crazy. Okay, they might do another split here because the price is very high. Apple did the same with the split. They had a split here and then it went up. And we have Apple, Google, we said Facebook, Amazon. Look at this monthly chart, booming up, $1,846 per share. Again, the highest ever. The highest ever. You know, there's big fear from inflation in the United States. Prices will go up, but wages are going up as well. More payroll, salaries are higher. I don't know. It just looks too good, and they're very highly correlated. All these technology stocks. All right, so you can write it down. Okay, so how to trade this report, the reports. Okay, have the earnings calendar ready. Go to our website, pretty easy, itrader.com. Under news, you have earnings season, right? So you click on earnings season, and then you're getting the calendar. You see earnings season, Q2 2018. All right, so you have every day. You see what who's the company that published. You don't have to guess. You have it on the website. All right, company by company, Goldman Sachs and IBM and so on. Okay, we have the date. So tomorrow we have. These are the companies, and then on the 19th, and then General Electric on the 20th. Okay, and then you have either its report we said before market or after market. So you have all the information on the website, so you can know every day which stock is publishing, right? Okay, great. Now, so we have the earning calendar ready. Pick a few stocks to follow. Okay, you're not gonna trade on all the stocks during the earning season. We have to do it smart. So pick a few stocks that you wanna trade on. Look for key numbers in the reports like amount of products sold or users joining, as I just told you. Okay, try to think what is let's say you picked a few stocks. You look for the dates of the reports. Okay, and then don't trade before the report because this is just gambling, right? If we don't have the report and you buy and sell, you'll either lose or win a lot of money, but it's gambling. We don't want to gamble, right? It's your money, you work hard for it. Wait for the report itself. Go to just on Google, write the name of the stock and pre-market, and then you're gonna know what is the price before the market is open. You're gonna know what will be the price when the market will be open. Then I want you to do three things, right? First thing I want you to do is technically, right? We said a professional trader is one that knows how to combine the technical analysis and the fundamental analysis that I'm showing you right now. On the technical level, it's very important for you to put some key levels on the chart itself, which means support and resistance levels to understand the highs and the lows, okay? Because on any trade that you take, you want to know where to put your take profit. A smart trader is one that knows, that understands that the market is very volatile, that a lot of things can happen in a day, in 2, in 1 hour. And one that knows is exit point, that knows when to get off the trade, put the money in the balance, and that's it. I'm out, money in my pocket, right? I don't know if you ever had trades that were successful trades, but then you waited too long, and the price of the asset went the other way, and then you lost. All right, so you need to know to your exit point, and this is why we put lines on support and resistance levels to understand the highs and the lows and the exit points and take profits. This is one. Number two, try to think this about the psychology. Okay, usually what happens, this is when you see, for example, like with Netflix today, that there was a gap, and now the market is trying to close the gap. Think about it, psychology, what happened? A lot of people were holding Netflix stocks. Okay, there was a bad report, the corporation sold the stocks, price went down by like 15%, and then when the market opened, people said, wait, this is a very cheap. Netflix are doing great for a few years right now. So they had one bad report. We're talking only about 5.1 million, right, versus 6.3 on the forecast. All right, we'll buy the stock, and then millions of dollars went in. People put bids in order to buy Netflix stock. Price went up. Okay, remember the correlation. You still have Amazon, Facebook, Apple, and Google that are going to report same correlation. That's a huge thing for you to remember. Technically, and the second is psychology, and the third thing I want you to do is look at the index. Right, you have the future indices here on the MetaTrader. If you don't go down here, you can look at, and it's 24/5. You can look here at for the Nasdaq, for example, on the daily chart. Right, you see the daily chart of Nasdaq today is green. Now, this is traded when the market is closed because these are futures. These are future contracts. It's 24/5 traded, so you can know whether the U.S. market is going up or down even before the U.S. market is open. So you have a sign to understand whether it's going to go up or down. All right. So these are the three things that I want you to do the day after. Look for key numbers in reports, as we said. Trade results together with solid support and resistance levels. We said it, combining the technical analysis with the fundamental analysis of the report itself. All right, guys, and of course, good luck. Let me repeat it. Okay, what we want to look for? Look at the calendar, pick up a few stocks. All right, put the daily chart on. Put two lines: support, resistance. Understand the highs and the lows of the prices. Okay, and then when the report is published, look for the key numbers. Try to think, what is the key number of this company? Look for the key numbers. See if the key numbers fit the forecast or not. Look for the EPS, if the company made money. It's the earnings season after all. Okay. Look at the pre-market price, and then when the market opens, okay, see how close it is to the support or resistance. Try to understand, look at the index where it's going, okay? Try to understand the overall mood, and try to think, what would you do if you were holding the stocks of the same company before it was published, okay? Before the report was published. I'm gonna be here every week. All you have to do is just go on news, click on webinars, put in your first name, last name, and email address. This is a free service that we give you as traders. If you have any questions, of course, you're more than welcome to email me during the week or ask me right now. You can put it on the chat window. I would like to thank you very much for participating. For more info, contact your account managers. And I'm going to be here next week talking about the next topic. I would like to thank you very much for participating on this webinar. I was Neil Green, and have a great evening.